I think we'll go into a hyperinflationary depression. If they're going to issue new currency based on debt, then they have to get rid of the debt. And for Zimbabwe, it's really interesting to watch this unfold, because once you have gold backing a currency, then, it fixes the debt where it is, and it puts restrictions on how much more you can grow.
Mm-hmm.
And if you listen to the talking heads on Bloomberg, CNBC, wherever, and they're talking about growth, while they're talking about the ability to take on more debt.
Mm-hmm.
And I don't care if you're a government, a corporation, or an individual, most are maxed out in their ability to take on more debt.
Right.
So I see a transition away from the U.S. dollar easily, and it's speeding up. It's speeding up. Where we used to hold 100% of all those other countries, because as the world reserve currency, what that means is if you are a government or corporation, and certainly individuals know this if you travel, going outside of your borders, you had to use U.S. dollars to buy oil, lumber, steel, medicine, whatever. And so arguably we were at 100% global usage, which is a huge advantage to export dollars, export our inflation, et cetera. Now, most currently, the reading is 47%.
Wow.
And about a year ago, don't hold me to this because I'll have the data right in front of me, so it might be 2 years ago. But recently, we were still at above 60%. And today we're at 47%. So, like you said, timing is, the hardest thing for any technician. I can tell you what is most likely to happen based upon lots and lots of history and data.
Right.
But we're at the end game right now. And I think what we are witnessing is a complete breakdown of the system, because the system actually died in 2008. And it was simply put on life support, and that life support is just the money printed, right? That's all that is that was the life support, because that's all that they have is boosting up their balance sheet with lots and lots of garbage, buying back lots and lots of treasuries. But we already saw a lack of liquidity in the treasury market in 2015. And so that lack of liquidity, the ability to buy and sell easily without big dislocations, look at what's happening right now in the treasury market, and understand that the treasury market is the foundation of the global financial system.
Right.
And you now have, if you watch the patterns, you could see when the Fed handed over the management of the treasury market in 2013 to the traders. I can't really tell you whether this is intentional or not intentional, because when you know you're at the end and you know you're going to declare bankruptcy, if somebody gives you a credit card, what are people most likely to do? They're going to go max it out, right? Because you know it.
Yeah.
So, I think we are precariously close. And what we're experiencing between the issues that are happening around the banking system and inflation and the treasury markets and the transition to a completely new interest rate benchmark, which is, if you're going to have interest, that's debt, right? So a completely new transition. To be perfectly honest with you in this, what I am seriously seeing is that whoever holds the gold, and this is why the central bankers are accumulating it so much, they're the ones that are going to have the choice and be at the forefront of this new world order, which everybody is now talking about. But I've been talking about a reset socially, financially, and economically since 2009. And it was China that brought the SDR up as the alternative.
Right.
The SDR is the currency of the IMF. I'm sorry, but I'm not convinced that Bitcoin is out of the system when I see Wall Street adopting it. So, so much. So yes, full surveillance. The IMF did a report, and I think it was 2015, but don't hold me to it. And it's one of my favorite reports that they've ever done, which is called Breaking Below the Lower Zero Bound. So how they can take the whole world negative, right? Negative rates, they want us to think that negative rates are a choice. That is completely illogical.
Yeah.
Completely illogical. But they can force it, right? So they can force you to spend. They can dictate where you're going to spend it. And Ford recently came out and got the patent, and the IMF have talked about this, got a patent on the self-driving cars. So if you do not, all these smart houses, the smart cars, and all of this smart stuff, well, that has the smart contracts on there. And if you miss a payment, then they can lock you out of the car and drive the car away. They can lock you out of your house. And what are you going to do?
Wow.
So, yeah, you have to do things that can ensure that you are as independent and self-sufficient as possible. Because if you are not, you have to do what they say. The consolidation and the loss of mom and pop, which is really the backbone of this country. So I would say mom and pop stores. I would also say the regional banks, right? That transition and that consolidation in both of those sectors had really started back in like 2000. And so, yes, because part of what they've been reimagining is the role of these commercial banks. And they are going to, and understand, when did FDIC, when was that born? Oh, yeah, 1933. When all confidence in the banking system was lost, what we've been experiencing is a consolidation, on a much, certainly in banking, but on a much bigger scale of that. And I'm also old enough to remember when if you were unhappy with a product or a service, you could go to the decision maker and say, I'm unhappy. And they wanted to keep you as a customer. So they did what they needed to do to make you happy again in most cases. Sometimes you can't, but in most cases, right? Today, I mean, what service is there? What's happening in those derivative markets? All we see is the tip of the iceberg. And you see what's happening with the problem with, it's not just the regional banks, it's all the banks, including the central bank, that has massive losses on their books